Welcome back to realestateexperts.com online. That's our website. You can find all of our partners making this show possible right there, and reach out to us if you have a housing problem, need, or question. As always, the realestateexperts.com. Thinking of selling? We've got the home evaluator on there. Valuation is free, no obligation, right there online. John's email is sort of the second half of our show here, because last week he said I didn't quite close the circle on the economic predictions of the market in terms of what are the first signs of it and what should people do in response. I think I probably glazed over the fact that the first signs are here and now in housing. We have a lack of competent resources, number one. Trying to get something done at a reasonable cost on a home or renovation project in Metro Atlanta right now is severely strained. The main reason it's severely strained is a number of things. There isn't just one, but there are two main reasons, I should say. Number one is that we have a very strong jobs economy and market right now because of what the economy is doing. And so people that were dependent upon laboring in the housing space, doing renovations, helping rehabs and flips and building and all of that, are now capable of getting jobs more in line with what they really want to do. In times like this, some of the laborers get the bright idea, even though they may not have the business acumen, that they want to run their own contracting shops. And so now you have a struggle you hear these ads all over the radio for companies not trying to get you to do plumbing with them, but to try to find plumbers who will work for them, as an example. So the amount of pay is going up. That's then passed on to the homeowner, you and me. And the costs are through the roof. I've had jobs recently where I had one contractor quote $1,500, did a completely pathetic job of it because he's incompetent and unskilled. And then the same job with someone else who is competent and skilled is $4,000. 2-3 years ago, it had been $2,000 to $2,500 for the same competency and skills. So you have an inflation in the housing market right now in terms of HVAC, roofing, materials, repairs that has gone through the roof, no pun intended. Part of that is the jobs market. The secondary component of it is what's happening with these hurricanes. Now you're going to have some rebuilding that's going to have to happen over in the Carolinas because of the last hurricane. You still got Houston under a massive restructuring, huge amount of flooding. Puerto Rico and other parts of the coast relevant to storms last year. That's not even counting labor and resources that may have been sent down at very high prices to the Caribbean. So not only are materials being consumed at just an unbelievable pace, you also have labor being extracted from the market and taken to other places where the pay is even higher and the demand is great. That then lessens the supply of labor for housing purposes in Metro Atlanta, and thus does what? Supply and demand prices go through the roof. It's insane trying to get something done right now. And I'm dealing with it on 24 properties. If it's a plumbing problem I get a call about, or I need to do some plumbing, I've got to go to plumber. But I don't have anybody that could put sheetrock up and do basic carpentry because they either are seemingly on crack and can't finish anything. And if they do, they don't do it well, or they want so much money for it, it doesn't make economic sense. Well, that's a sign of a problem, a huge problem. We have not provided a labor mechanism in this country to supply what's needed to keep this economy going. Parts of this economy, in my view, from real experiences, are beyond capacity. For the longest time under Obama, we were operating well under capacity. People were begging for work. And I was able to give a lot of that work out at reasonable prices. Now, I'm begging people to work and pay them even more, especially in the carpentry space. So the first sign of fracturing in the housing market is the labor incompetencies and the capacity issue we have now. It's untenable, it's unsustainable, and it will cause huge problems. Secondly, is, as I discussed last segment, the fringes of our market, the counties outlying or the areas of counties outlying 285, 5 miles north of 285 around the circle, are starting to see price reductions on active listings. Time on the market is increasing, if not just slightly in certain areas. And the number of inventory is not declining as it normally does this time of year. So this is the first time that we have seen this sort of bottom out of the inventory and now a little bit of a bump up. And that is a sign that we have hit the end of the supply and demand issues that have led us to this great expansion and recovery in housing prices, not only recovery, but expansion and in the overall economy. That doesn't mean the economy is quite there yet. I don't know where the economy is. I'm not an economist, but I do see the economy for what it is. I see a lot of the same type of conditions occurring out there right now the type of greed and unregulated corruption. Not that it should be regulated by the federal government; it should be policed accordingly. But it's not quite there yet. We've not recovered the police mechanisms just in the state. I did the interview with Brian Kemp, the Secretary of State, Republican for governor here recently on these channels. And I asked him the question about regulators and compliance officers for certain boards that are under the Secretary of State's purview. And when he came into office, it was $1.7 million. It's now $700,000. He said he had a 25% budget cut by the Dome of Dummies, our gold dome. And that he had legacy leasing and other issues that cut it even further. And that's why there was such a deep cut in what regulates and holds accountable people who are bad in the industries that they police. I'm not saying this to blame it on Kemp. I'm simply saying it to blame it on our state government as a whole, that certain things that keep the bad actors in check are not keeping up with the growth economically that we're facing, which means that people are getting away with more and more corruption and bad dealings, with no policing and no accountability, which means that then starts to harm people and create destruction within the market that contributes to all the stuff I'm talking about. Interest rates are another issue. My wife spent some time in an REO conference, real estate owned or foreclosure industry, default industry servicing, which she does a lot of, last weekend, where they're predicting that there will be another pretty decent foreclosure spike forthcoming. I don't see how that happens until there's fracturing in the job market or there is just a significant reduction in housing prices. And there's only one way that can occur, in my opinion, significant reduction in housing prices without job loss, a massive spike in interest rates. And if the economy keeps growing at this rate, that could happen, which means it could isolate the problem to housing, maybe not like the early 1980s. Remember the days where it was 18% rates or higher. I don't know that's coming again, but it's possible. Inflationary pressure could be there. So what do you do about it? I've given you all the examples and exhibits of things that I see right now that overwhelmingly point to a correction in housing in the next 12 to 24 months and likely less. So what do you do? Well, you got to look at you. That's why I call myself a problem solver. That's why we invite you to go to our website. If you're thinking about buying or selling, you own stuff. I've got investors right now who I think very wisely are selling out properties they've bought very cheaply during the crash, have seen great appreciation from the bottom to the top, and are kind of escaping them. And, it doesn't necessarily make complete tax sense to sell everything right now, but it doesn't not make sense either. Because if prices come down 5, 10, 15%, then arguably you're stuck in the market and you got to pay taxes at the same time. So it makes sense to not worry about, I think, the tax implications of it and not let that speculation drive your decision. I think if you are looking at retirement in 10 years or more, and you own homes now with little to no mortgage, you should hang on. Because overall, the housing market's going to be incredibly strong over the mid and long term. Midterm meaning, I don't want to say midterm, long term, 10 years or more. Whatever correction we go through now, I think it's evidence we just went through a bad, deep, awful one. And look where we are now. It's really kind of exciting again. And it has been for a while. So I don't think that I would worry about it if you have a 10-year plan. I have properties or family has properties or whatever that we're going to keep for years and years and years. So if they go down in value and I could have sold out now and bought back, I don't care about that. But the stuff that I kind of just want to get rid of, that HOA that sucks, the developers that's still involved, the things where they're going to destroy value, I've been selling those off gradually over the last year because I can't buy anything. I can't renovate anything reasonably. So all the things I've discussed give me the signs that I'm buying into the fact that the things I don't really want to keep long term, I got to get rid of now. Right now. And that's not a sales pitch. That's a reality. Then I got to look at things like this second home that we've built, which was a nightmare we've well chronicled on this show, that has some real problems with what I think is incompetencies with the developer and or their people. Some things that I think at best would be described as shady, at worst could be described as crooked. And I think that development, unrelated to anything I say do or don't do, is going to go through a very tough time over the next 5 years, and I'm going to watch property values decline. But I also know that will overcome itself over the long term because real estate has a way, if it's a great asset and a great property, of doing that because it cleanses the incompetencies and eventually those things go away and competent people come in, buy it for a song and a dance, fix it up and whatever. So in situations like that, while I don't believe I will ever buy anything ever again in a homeowners association, I'm going to stick with those that I have now, except maybe one, and ride through whatever happens over the next 10 years and save whatever cash that could potentially be used for purchasing now and flipping, so that I don't get stuck in the market on something I don't want to keep, and wait until we hit another place like this where it kind of looks like a bottom, even if it's not quite there, and then start buying again. The mistake I made last time was both in housing and in brokerage. I was buying companies during the peak, and I was buying properties and retaining them during the peak, of which I had lots of equity in both. I should have just kept my company small, resisted the idea of expanding the company by acquiring other companies during a time where those prices were expensive, waited for everybody to collapse and gone in and bought everything at 10 cents on the dollar when no one could sell anything, and collect the assets and the goodwill of those companies and apply them to the growth of my company. Don't really regret not doing that, because I learned so much that's instructive for my future. I couldn't explain this in the way I am now if I hadn't done that. If I had done it exactly the right way, I wouldn't know how to do it the exceptional way. So I don't regret it, but I'm just saying that was, if I can pick, hindsight's 2020, you shouldn't be buying right now for investment at all in the housing market. You should be selling the investments you're not planning to keep for the next 10 years. You should be keeping what you're comfortable with, where you're living. If you're, don't try to time the market, and save your cash aggressively, because there's going to be an opportunity coming up. Everything I've said on this show today is not to depress you. It's to say these forces politically and culturally, these things I'm talking about now are about to present you with an opportunity to rapidly expand your wealth over the next 10 years. Have a great weekend. In the meantime, reach out to us at therealestateexperts.com.